Coming up on Energy TV Investment Edition, we're coming to you from the Offshore Technology Conference in Houston. We talk about what you need to know about budgeting your cash in times of a slowdown.
Our houses have increased, the equity in the houses have increased dramatically over the last number of years, so there's additional assets which we can pledge, and we can go buy some more toys, go buy the boats, vacation properties, that type of thing. So people have been used to living like that.
We take you to South Africa, a world leader in mining, and profile one Canadian company that plans to profit.
We've identified three main centres of gold mineralisation, where we've extended mineralisation from surface down to a 220-metre depth, so it's very amenable to open pit mining.
And what you need to know about recreational properties in the Crow's Nest Pass.
Still possible to get a beautiful property and have this stunning view and the wildlife walking through your front yard.
This episode brought to you by RealInvestmentsTV.com.
Welcome to Energy TV Investment Edition. I'm Helena DeVries. I'm coming to you from Houston, Texas, and the 2008 OTC, that's the Offshore Technology Conference, the conference for anything offshore. There's over 70,000 people that attend this event every year. Now, of course, oil and gas has been booming, but in some cases, there has been a bit of a slowdown. Take Western Canada and drilling, for example. Now, people that work in the industry are used to quick cash, but in times of a slowdown, that can dry up a little as well. And we have some tips for you on how to budget in those times.
Over the last couple of years, it's been all relatively good times. Everybody's been living well. They've been making good paychecks, good bonuses. We got stock options, great raises. So with that, we've been going out and buying the toys.
Times are changing. Money is tighter and financial decisions weigh heavy on the minds of many. In the energy sector, activity has slowed compared to recent years, leaving many workers in the industry without as much free cash flow.
Our houses have increased, the equity in the houses have increased dramatically over the last number of years, so there's additional assets which we can pledge, and we can go buy some more toys, go buy the boats, vacation properties, that type of thing. So people have been used to living like that.
The energy industry is experiencing a bit of a slowdown. However, Kelly believes that doesn't have to affect your financial stability in the future.
So they got to take a good look at their family situation. You know, what are we paying for a mortgage? What are the principal needs? Budget those, then come up with some discretionary money that they can use to have a little bit of fun. Not saying cut everything out completely, just do things a little more, watch things a little closer. And also pay yourself first. Make sure they're putting some money aside, 5 or 10% of paycheck if they can afford it, put it into a separate account.
A successful budget involves more than just setting the money aside, says Kelly. Buy into your budget, believe in it, and monitor it regularly. He believes another bulletproof strategy involves your RRSPs.
If somebody gets into trouble like that and you got an RSP with a bank, it's potentially a risk. If you've got it with a life insurance company and the proper designated beneficiary, then in that case it's protected and you would keep that.
Fiscal responsibility is something people in the industry should strive for early on, says Kelly, as prosperity can fluctuate with the market.
People in their early to late 20s, all they've known is the good times here, where everything's gravy, the money just keeps coming. It's easy to walk from one employer to the next if you're not happy, but that's not necessarily the case. But in the interim, right now, they're spending all that money still, and if things slow down, they're not going to have that money to spend.
Additional advice, Kelly says, is to protect your family assets if you're self-employed in the industry.
Protected. So you want to get your finances structured so that perhaps it's the spouse that owns the home, owns the investments, and the welder's the one that's out earning the living. So that if something does happen, then the family assets are protected.
Kelly says the key for financial stability is to properly plan, budget, and take into account the rise and fall of economic opportunity.
Times aren't as good as it were 2 years ago. It's not gloom and doom. Just people should now's the opportunity to start thinking about, hey, it may not always be roses. Well, we have an opportunity now. Let's take a good look at our situation, do some planning, do some budgeting, and let's just protect ourselves in case things do turn south.
Chad Carrier, Energy TV.
Now we're here in Houston, Texas, but when it comes to mining and commodities, Canada is the place to be. In fact, there are so many companies, it may even be mind-boggling for investors trying to figure out which ones to invest in. Here's more.
This is a sector that went through 20 years of hell, not to put too fine a point on it. I mean, just like it's a commodity secular bull market, it was a secular bear market for 20 years. Incredible underinvestment. Nobody wanted to hear about this stuff. Nobody wanted to deal with it. Nobody wanted to work in this sector. Now you've had this massive turnaround, and it's next to impossible for the sector to keep up.
Coffin says this increase in demand for metals is thanks to economic growth spurts in countries like China, India, Brazil, and Russia. But it's a huge challenge for the mining industry to find enough of the resource to meet demand.
There aren't enough geologists, there aren't enough assayers, there aren't enough ball mills, there aren't enough truck tires. I mean, you name it, right up and down the scale. That brings on its own issues. We've seen a lot of cost increases in the mining industry because it's simply gotten very difficult to get past the infrastructure issues, to get new equipment, to get new personnel. But what that means is that the growth in supply is having a very hard time keeping up with demand. And as anybody who's taken Economics 101 knows, that means prices are probably going to stay up for a lot longer than people think.
With high prices expected to stick around indefinitely, there's a lot of money to be made in metals, even with the uncertainty on the stock market. Coffin expects to see a lot of mergers and acquisitions in this sector in the coming years. The average investor could see a big payoff with metals too, but Coffin says you must do your research.
Even though we think this is a big cycle and we're still in the early innings, you know, don't forget to trade stuff. We don't think there's any such thing as widow and orphan stocks. I mean, they just don't exist anymore. All stocks are trading stocks. If you do trade the more speculative stuff, when the market gives you a gift horse, don't stare at its tonsils. Take some money off the table. You probably want to start in companies that are either in production or pre-production, close to it, where they're far enough along where they can really lay out the economics for you.
Coffin says when researching companies, don't be afraid to give them a call before you put up your investment.
This isn't a market where everybody's comfortable enough where you want to have a stock that doesn't talk to you. I mean, they need to be talking to you. They need to be putting out stuff. And never be afraid to phone the company up and ask some questions. I mean, that's what Dave and I do.
So we've talked about mining in Canada. Now, what about mining in South Africa? It's actually one of the leading places in the world for mineral deposits, and one Canadian company is hoping to cash in.
One of the problems we face is the financial risk to the company in being able to fund exploration on all 27 licenses, and also finding the number of people to carry out the work. So we've evolved over the last couple of years to a company with a two-pronged business approach.
More on that when we return.
This segment brought to you by InsideFashion.com. This episode brought to you by MiningIndustryTV.com.
Welcome back to Energy TV Investment Edition. We're here in Houston, Texas at the OTC, that's the Offshore Technology Conference, the conference for anything to do with offshore technological innovations, and of course a great opportunity to network. I see the Nigeria booth just away from me here, and countries such as Italy and Russia and China, you name it, they're all here. Over at least 30 countries make an appearance at the OTC. Now, speaking of countries, South Africa is one of those rare jewels when it comes to commodities, and one Canadian company is looking at opportunities there.
My name is Richard Williams. I'm the CEO of Helio Resource Corp. We're an exploration company focused on Southern Africa. We have 27 projects in Namibia, Botswana, Mozambique, and Tanzania.
Founded in 2000 by Williams and fellow geologist Chris Mackenzie, Helio Resource Corp grew when the two recognized the ample opportunities in Southern Africa. Since then, the exploration company has acquired 27 different licenses across the continent.
It's a huge land area, but I think one of the things that we offer as a company from the exploration perspective is our ability to generate new projects in areas that have really been overlooked or underexplored, and Southern Africa fits into a number of those categories where it didn't really receive a lot of the modern exploration that the rest of the world received through the 1970s and 80s. And so we started the company in Namibia, recognizing that it had a very good geological survey, a good database available to a startup company like ourselves, so that we could get, a step ahead.
While holding 27 licenses provides Helio Resource Corp with many potential opportunities, it also poses some challenges.
One of the problems we face is the financial risk to the company in being able to fund exploration on all 27 licenses, and also finding the number of people to carry out the work. So we've evolved over the last couple of years to a company with a two-pronged business approach. We have the SMP Gold Project in Tanzania, which is really the focus for the company, which is where we're spending most of our resources financially and personnel-wise at present. And then we've got the projects in Namibia, Botswana and Mozambique, where the approach there is to try and attract joint venture partners and at least allow us to go and explore those licenses, carry a retained interest for the company, and hopefully get those projects funded by partners.
Southern Africa is perhaps the most significant geological region worldwide, playing host to the largest known gold, copper and diamond deposits. And it's that potential that has attracted Helio Resource Corp to that area of the globe.
The SMP project we acquired in late 2005. Initially we picked up one license, and in late 2006 we acquired 3 additional licenses, which now gives us control over an almost 30-kilometre section of what we call the Sasa Shear Zone. It's located in an area known as the Lupa Goldfields, and in the 1920s to late 1950s, it was probably the second most important gold producing region in Tanzania. It hasn't really been looked at since the late 1950s, and what we've acquired within our project boundary is an area that had 4 colonial era gold mines. One of those, the new Sasa mine, produced probably a third of the total of gold produced in the Lupa Goldfields. There were 2 shafts. They mined underground to at least 200 meters depth. So we know that there's good vertical extent to the mineralization.
Drill testing over the past several years has shown encouraging and positive results, making Williams confident that there is a significant resource on the property.
We've identified 3 main centres of gold mineralisation, where we've extended mineralisation from surface down to a 220-metre depth. Where we've got the highest density of drilling, we're looking at an average grade of over 2.5 grams per tonne gold over a width of around 15 metres. So it's very amenable to open pit mining. We've got good extent, and I think that's given us the confidence that, number one, the project area has a lot of gold in it, and number 2, the potential is to develop a very large resource. With all of these 12 other targets that we've tested, we could see a multiple of that potential through the rest of the license.
Williams adds that the massive size of the deposit is what separates the SMP project from other ventures.
All the way along this 27-kilometre long shear zone that's within our license, we've got numerous gold occurrences, so there's room within that project area to build a significant resource. If you add up all the different structures that we see on the license, the main Sasa Shear Zone trends east-northeast, but cutting across that you've got a series of northwest to southeast trending structures. And if you put them all together, we're probably looking at 40 to 50 kilometres of target area to go and test. So we think obviously the potential is very significant.
While the geological makeup of Africa is attractive, Williams admits that there are challenges to working in undeveloped territory where politics can be as hot as the climate.
One of the big issues right now is power availability in Southern Africa. It's certainly affecting companies' ability to produce from the deep gold mines in South Africa. So one of the ongoing processes in that part of the world is developing the infrastructure to cater for the resource extraction that people are starting to envisage going down. On top of that, Africa is obviously a very large continent, and there are a number of countries which we feel from our company perspective are higher risk to do business than others. So we've tried to focus on countries that have well-established mining codes, a government that recognises the benefits of mining to the economy, and an area where you can go in, you can make a discovery and you can develop a new mine with the support of government.
Meanwhile, Helio Resource Corp also continues to hold projects in Namibia, Botswana, and Mozambique, and the company is actively pursuing other exploration projects in southern Africa for the future.
I think all of the projects that we've picked up in Namibia, Botswana and Mozambique were picked up for a reason, and that reason being that we felt they had potential to have a significant resource. We don't specifically look at any type of commodity. Right now the focus is gold in Tanzania. We tend to focus on projects because of the quality of the geology and the potential for a specific type of deposit, be it zinc or what we call polymetallic, where you have gold, silver, lead, zinc and copper, or diamonds in Botswana. The reason that we're focusing in Tanzania is that that project is more advanced and we can see ourselves reaching a resource stage at a much shorter time frame than, say, the projects that we have in Namibia and Mozambique.
Now, South Africa was the world's largest gold producer. It has since been overshadowed by China. Now, coming up after the break, a look at the U.S. subprime mortgage crisis.
It was referred to as an exotic mortgage. Not only did your mortgage payment not cover off any principal reduction, in many cases, it also didn't cover half of the interest.
More on that when we return.
Closed captioning provided by EnergyTV.com. This episode brought to you by careers@chandranmedia.com.
Welcome back to Energy TV Investment Edition. I'm coming to you from Houston, Texas. Of course, the OTC is going on. Now, Houston's housing market doesn't appear to be as bad as, say, Dallas's housing market at this time. But across the United States, the subprime mortgage crisis has really had an impact on the housing situation there. If you're not sure what it is, here's an update.
How much do Canadians know about the housing crisis in the United States?
Not much, just I know it's bad.
Yeah. What have you heard?
Just that people are losing houses, people that are overinvested are losing houses.
And what do they think about it?
Well, I think it's sad, but at the same time, it's their culture and their political idiom has led to that.
That's scary, and I feel really badly for the people.
It's referred to as the subprime mortgage crisis. Thousands of people south of the border are without their homes, losing them to foreclosure because of a mortgage they thought they could afford.
It was referred to as an exotic mortgage. Not only did your mortgage payment not cover off any principal reduction, in many cases, it also didn't cover half of the interest.
John Murphy, the CEO of 2020 Properties Group, breaks it down for us. He says these mortgages were made up of capital from institutions like banks and were handed out based on the American real estate market going up.
They were assuming that residential property values would continue to rise, and therefore it was safe to give someone a mortgage where there was a less than interest payment made, no principal paid, and a balloon payment later on to make up for the interest that they weren't covering at the time.
But the market did just the opposite. Mortgage brokers walked away on top while thousands lost their homes, and institutions that had subprime mortgages in their corporate portfolios lost big time.
CIBC was chastised in the beginning for having it on their books and then for coming out later saying they've got more. The amount that's been recorded by substantial institutions is far less, everybody's aware, than the total that's out there.
The money lost in the subprime crisis is now in the billions, and houses are selling for cheap, which gives Canadians a great opportunity to hop on a plane, head down there and invest. But just like any other purchase, Murphy says you have to know what you're buying. But Murphy suggests cheap real estate is not the only effect Canadians will feel from the current crisis.
One of the main conduits for commercial mortgages in Canada, which is referred to as an MBS, mortgage-backed security pool, has dried up. There's no longer an appetite in the United States to buy packaged mortgage securities. and that's causing a 25% decrease in funds available for commercial mortgages.
Murphy says he doubts the subprime crisis could happen here in Canada, not now. But that doesn't mean residents here couldn't expect to see something similar. So he says to always remember,
If it ever sounds too good to be true, it probably is.
Now, of course, with any slowdown comes opportunity if you've got the time and you've got the money. The Canadian housing market hasn't been affected as much as the United States housing market, and that, of course, has Canadians perhaps looking at recreational properties as investments. One area you may want to consider is the Crow's Nest Pass.
Real Recreation brought to you by Stone Set Equities. Integrity in every environment.
it's a valley nestled in the middle of Alberta's Rocky Mountains, and it's looking for tourists to discover it.
Coal mining has declined in the Crow's Nest Pass over the last century, and so we have to take advantage of what else there is to carry our economy through.
Liz Martins has been a realtor in the Crow's Nest Pass for the last 5 years, and she says developers are starting to move in. 5 new ones have already begun construction, clearing land for vacant lots and creating new recreational properties on this virtually untouched land.
It's still possible to get a beautiful property and have this stunning view and the wildlife walking through your front yard, all at still a reasonable price in relation to a lot of the other heavily developed resort areas.
In fact, it's still possible to get a single-family home for less than $300,000.
Yeah, let's go for a walk, eh?
Ken McEachern recently moved here after more than 20 years in Canmore because in the past, he could actually afford to buy his own home.
Oh yeah, we're excited, because it's our own home and our own yard, and with a garden in it, and so we can do what we want with it, as opposed to being stuck in a condominium type situations in a lot of high tourist areas.
No matter where you go in the Crow's Nest Pass, if you have a nice clear day like today, you will get an amazing view. Behind me here is the Crow's Nest Mountain, and it's one of the biggest landmarks in the area.
People say to me that they want to buy something with a view, and I say, well then, end of story. You've already got it. You're here.
The downside, this community is known for its winds.
It's a little windy, but you know what? That's what brings us these great Chinooks and the warmer temperatures in the wintertime, so I'm willing to take it.
The pass also brings lots of activities to those who love the outdoors. Things like cross-country skiing and some of the best fishing in the country. But just like many other mountain communities, there is limited land to build on, and realtors like Liz Martins suggest investing sooner rather than later.
In the coming years, you're going to see fights over the remaining available land, and more people looking to take advantage of what's here.
Now that's an investment in a breath of fresh air. That's this edition of Energy TV Investment Edition. Join us for our Energy TV Industry Edition. Of course, you can check your local listings or catch us always online at energytv.com. Thanks for watching. We'll see you next time.
This program brought to you by CEOTV.com.